Welcome back to Morning Trade Live. It's time for Inside Out. Let's welcome in Norm Conley, CEO and CIO of JAG Capital Management. It's nice to see you this morning on a beautiful Thursday. So I thought it was interesting when I was going through your notes that you said volatility is creating some opportunity. It may give everybody a heart attack from time to time, but you see opportunity.
Well, yeah, I think, this has always been true about all risk assets in the sense that without the volatility of those risk assets, including, in this case, equities, you don't get a premium or an excess return over a very long-term period of time. So yeah, we've had some volatility recently, but really, if you think about it, the S&P 500 is about 3 to 4% higher than it was coming up on 19 months ago. So we really haven't made a lot of headway, and but in the meantime, we've had a lot of big swings up and down, and that's volatility, writ large.
I liked how you said about disruptive companies, but you're looking for strong revenue. What would be examples of that?
One of our holdings is Twilio, symbol TWLO. Very disruptive. They're basically building a communications platform as a service, primarily for enterprises that need to interact with customers through a variety of mediums, text, email, phone, call centers, et cetera. So, Twilio has been, really disruptive in their space. They're growing like a weed. And it's also another example of one of those volatile companies in terms of how their stock trades. And recently, Twilio, along with some of the faster growth cloud type stocks, have kind of taken it on the chin.
Would that be a Salesforce?
Salesforce is part of that crew as well. ServiceNow, another one of our holdings. So the market kind of goes through emotional waves of liking certain groups and disliking certain groups from time to time. And it's at least for the short term, it's the cloud stocks turn to be in the so-called penalty box.
So I wanted to get to your consumer picks. You believe in the consumer, and you have three names: Amazon, Lulu, and Starbucks. Can you kick it off with Starbucks?
Well, sure. I think, by way of backdrop, the U.S. consumer is probably the most powerful force in the world. We like to buy things. We like to consume things. That's been the case for the last couple hundred years. But Starbucks, sure. I mean, it's a global company, global consumer-oriented company, and has had a lot of success. Kind of ironically, with all the trade trouble going on in China. We actually saw that from recently, yesterday or the day before, on Nike's earnings call. Kind of ironically, both Nike and Starbucks, despite this huge amount of trade tension, are doing extremely well in China. And I think that shows the power of these brands, these U.S.-based brands globally. What
about the power of Amazon?
Yeah, so Amazon's been a long time holding for us. Really the story probably for the next 3 to 5 years for Amazon is global growth, right? Growing their franchise into ex-US markets. And, obviously an excellent company, arguably one of the top 3 or 4 companies in the world. AWS is a big part of the Amazon story. But serving U.S. consumers and serving global consumers, with basically the world's marketplace, they've I think of them as this generation's Walmart. They're doing to retail what Walmart did, in the 1970s and early 80s.
Also, I wanted to ask you about the payment space. I saw you have, Lulu you liked, but I'm going to skip that. That's a great growth story, and I know that we've talked about it a lot this week, but I wanted to get to another name that we haven't hit as much this week that you have as a name that you like, Visa and PayPal. What about PayPal?
Well, digital payments and moving to a cashless or a less cash-heavy economy is really a secular theme. So Visa's powering the payment network. PayPal is helping power e-commerce. Not just in the United States but globally. We really like both of them.
All right, Norm Conley, thank you so much. Great chat. CEO and CIO, JAG Capital Management. So now let's bring our own Tom White, because Tom White can take a close look at some of these names, including the Starbucks and Amazon. Yeah. Which one do you want to start with?
We'll start with Starbucks. Okay. I think there's a good topic to kind of hit on.
I start with Starbucks every day.
Yeah, coffee every morning, right, to get us going. But I look at Starbucks. It's pulled back about $10 from its all-time highs that it reached post-earnings 2 months ago. They did give a mid-quarter update with which they kind of were conservative with their guidance going forward. And that kind of has hit the stock. It's up a little bit today on a down day for the market. But if you look at their same-store sales, they increased 6%. And now this is based on the average ticket price increasing. We saw bigger sales over in China. Their ticket price is increasing. This is one of those names when the economy is doing well that people are willing to splurge on. And if the price goes up incrementally on a yearly basis or a quarterly basis, people are willing to spend that a little bit extra for this name. They're opening another 2,000 outlets this year, and their international growth is just booming. And their domestic is outperforming. They expected about 3% growth rate, but it was up above 6% globally.
It's amazing that they're going to open another two. I mean, you have to wonder where, but they held their ground in China against Luckin Coffee. Yeah. As you said, people are willing to pay for Starbucks. Costs a little more than some of the competitors. Right. They say, are you a Dunkin', McDonald's, or Starbucks fan for coffee? Yeah. And I also thought it was interesting they're being innovative. In New York City, in Penn Plaza, they will have a mobile-only Starbucks, where if they have this loyalty program. If you're a rewards member, you, through your mobile app, can say, hey, I want my mocha frappuccino on the bar when I get there, and it's all set up for you. So,
and I do that on a daily basis. I order before I get there, about 3, 4, 5 minutes at a time. Just pick it up, walk in, pick it up, and that'll actually help them margin-wise, because if they can decrease their employee count and just use the kiosks, that is impressive. But I kind of want to look at an options trade in here based on the fact that, hey, we could see some more gains in Starbucks. Maybe it gets back to those all-time highs once again, because it has pulled back, like I said, about $10. And what I looked at was a unique strategy here using options. And I used a call butterfly, and it skewed a little bit. And if you take a look at the trade here, Nicole, what I'm doing is I'm going out to the October monthly series, really liquid in those monthly options, buying the 90 calls, which is slightly in the money from the current share price right now, selling the 95 calls twice. So I'm buying one of the 90s, selling 2 of the 95s, buying one of the 97.5 strike. And what this does is I pay about $1.60 debit. And the call vertical on the 90.95 1x2 is $5 wide, and then on the upside it's only $2.50 wide. So I limit any downside to any upside if we get up to the 97.5, 98, back towards those all-time highs. I'm paying roughly $1.60 debit. My break even, 91.60 to the upside. Like I said, I've got about 3 weeks in this trade, and the optimal price for Starbucks to go over that period is 95, and that's when you get the most profitability in this particular trade. But if it continues to move higher back to those all-time highs, I'm limited on my downside where I'm still going to be profitable, because I skewed the call verticals in each one of the sections of the butterfly, where it's $5 wide on the downside, and then 2.5 only on the upside. So this is a way to play Starbucks if you have that assumption that's going to continue to move higher over the next several weeks.
And we might say it could be a headline thing, and I don't mean to be funny. I mean, honestly, just like the McRib did really well for McDonald's, pumpkin spice latte, this is the time, the fall time, is something that's very popular for the company, and they see more sales when they bring in they even bring it in early on purpose when they have these specialty drinks.
Yeah, and that might be one of those all-around, year-round type of things in the future. Their cold brew's really doing well, high margin on that product also during the hot summer months.
Yeah. And so, did you have any other trades on the Starbucks, or do you want to get to Amazon?
Just that one on Starbucks, and then Amazon down over 1% today. So this provides some opportunities if you're bullish on Amazon. And what I created was a simple short put vertical in this name, but I went a little bit wider than I normally would. But I want to stay risk defined in case there's any headline risks or Amazon starts pulling back.
Oh, I see.
They just had their product released yesterday. They got some new Echo earbuds that might take some share from Apple. So about 8 new Echo products also. But what I created was selling the October, so only about 22 days from expiration, selling the 1700 puts, buying the 1690s to create this risk-defined short put vertical, which is neutral to bullish in nature. Now, I've got about $45 cushion from the current share price, which is about $17.44 or so, to the downside. My break-even point, $16.97.40 when I'm collecting $2.60 credit. That's the most I can make on that trade, Nicole. But at the same time, I'm giving myself a nice cushion to the downside with the expectations, if you have that assumption that Amazon's going to stay bid here. It has pulled back from its highs above 2,000, so this is a way to play Amazon for a neutral to bullish strategy if that's your concept. But at the same time, you do have quite a bit of risk in this because it's a $10 wide put vertical. You're collecting $260, so $740 is your risk, $740 per spread. So you have to take that into consideration also. A little bit higher risk, but your reward's a little bit bigger also by doing a $10 wide short put vertical.